Hi everyone, this is Jason Barrack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. We have him on every few months. He's the editor of the hat-trick letter, goldenjackass.com. Jim Willie, thank you for joining me.
Oh, pleasure being on again, Jason. So much is happening. I keep saying that. We're in the ninth inning here. This is breakdown in progress. And it's amazing that so few can even notice that the system is collapsing. But we had our little pre-indicators, like the Treasury bond having fractures. We noticed all these various preliminary signals that things are going to break down, and then the rejection of the Chinese currency from the IMF special drawing rights SDR basket.
If the U.S. continues to delay the RMB being allowed into the SDR, do you think China will retaliate in additional ways to these recent devaluations?
Well, it's more like the Chinese got blocked. They're never going to be in the SDR for the International Monetary Fund. They're never going to be. Doing that would require the major currencies to suffer a grand liquidity hit, a grand decline and a liquidity hit. It's never going to happen. They didn't really give a lot of reasons why the Chinese RMB was refused entrance into the IMF basket, but the reason is really kind of simple. It would have drawn too much money, too many funds, too much demand away from the major fiat currencies, so they're not going to do it. They're never going to do it. So the real question is, what's going to happen now that we've got a currency war in progress? How's it going to play out? I mean, the United States didn't just sit back and say, all right, we're going to devalue your currency. I guess that's going to be okay. No, the Tianjin was exploded. I mean, I think we're going to see Langley fingerprints in there. I mean, this is really nasty. It's the most strategic industrial information center in all of China. It's not just a car plant. It's a huge port. It's bigger than Long Beach, California. It's also the site nearby of a supercomputer, one of the biggest in the world. It's got 1,000 square meter footprint. 1,000 square meter footprint. It connected all the banks, all the technology centers, shared technology information, controlled the space programs, space projects, and controlled the Chinese military. So if this was a Langley attack, it was a very strategic and targeted attack and a very effective attack. It's going to invite Chinese response. And I noticed that in a matter of a couple of days, the entire northeast seaboard, primarily New York, had airline database systems shut down. I mean, this is how it's going to happen, back and forth, back and forth. But the real impact is going to come, I believe, when the Chinese wrestle control of the gold market. And that's going to be by means of actual delivery of gold with respect to their futures contracts on gold and actual contracts in RMB and not the dollar. So if gold starts to be priced in RMB, that's a pretty big response by China. So I'm looking forward, Jason, to the next big event in this battle back and forth is the RMB currency of China being required by Eastern exporters for payment, for the BRICS nations, for the BRICS alliance nations, for the Eastern emerging market nations. They're going to ship export, yeah, and they're going to require RMB. They're going to say, we don't want your stinking dollars no more. We don't want your treasury bills. If you're going to print money like Zimbabwe, we don't want that. It's not a valid currency anymore for global trade. That's going to be the big, big blow. It's going to cut the head off the dollar, don't you think?
Seems China's preparing for that. They're putting the billboards up all over Asia that the RMB is the next currency, and I think your point may be valid there with the cybersecurity warfare, because we see in the U.S. media almost all the hacker attacks are blamed on the Chinese. Maybe that was retaliation then with that port city getting attacked. Maybe there was a strategic target.
Well, we're running out of not really, but it's like a round robin. In 2005, the hack attacks were blamed on Iran. I mean, doesn't anybody realize that they're mostly from Langley? Langley's got a license to steal money out of bank accounts through hacking, to use fraud and have your bank account, your credit card account used. There are no consequences. When was the last time Langley was brought to charges and had to do restitution for stolen money? No, we've lost the checks and balances. There are none. When in the 50s we started the Central Intelligence Agency, they had what they call Senate oversight. Now they just bribe the senators, and there is no oversight. There's nothing anymore. This is going to be very quickly lost control, battle left and right, and the big blow will be Chinese currency required in trade payments.
Why do you think China, Russia, and the BRICS haven't pulled the plug yet on the U.S. dollar and Treasury, and what steps do you think they need to be taken before they actually do it?
Oh, I think the pull the plug is basically the RMB again. I keep coming back to this. They set the stage with all the different, 32 nations having a Chinese yuan swap facility, which means that the 3 giant Chinese banks and maybe 5 Brazilian banks, if it's a Brazil-located yuan swap facility, they settle between the Chinese banks and the Brazil banks. They don't use dollars. There are 32 nations that have that. Okay, and now you've got the London and the Frankfurt RMB hub facilities, the hub center, and that's for currency exchange and bond sales, bond issuance in RMB. I mean, look for the day when Italy sells government bonds in RMB. Look for the day when Britain, England, sells government debt issued in RMB. So it's a natural follow-on that the Eastern nations, emerging market nations, BRICS and the alliance nations, that 120 nations decide, all right, we've had enough of QE, we've had enough of the wars, we're going to now demand RMB for payment. And, you know, U.S. firms deal with it. It's coming. That's what I think is going to be the big event. But it might have a preliminary shockwave with the Saudis announcing that they accept RMB for oil shipments. And when they make the announcement, they might even say, well, we've already been accepting RMB for the last 2 months. So this is really going to be an RMB event that pushes the dollar off the trade platforms. Then you're going to see right away after that, nations will diversify out of treasuries in their banking systems because they won't need them for making payments in trade.
We're rapidly seeing the RMB becoming a trade currency. It hasn't become a massive reserve currency yet, but I think the first step is for rapid trade conversions. Then if the oil-producing countries start accepting RMB for oil, then that's going to really hurt or kill the petrodollar.
It will, but it's going to be far more than just oil-producing nations, and I don't really care about OPEC anymore. Venezuela doesn't even export much oil anymore. Indonesia might, but I don't really care about them. I care about the Gulf nations, what they call the Gulf Cooperative Council, the GCC nations, Saudi, Oman, Qatar, Kuwait, UAE. Those nations, they've been courting China now for over a year. So we're going to see some climax events with them. But it's far more than just oil. It's all the Eastern nations, the emerging market nations, that have been accumulating large reserves. So for the last several years, if not 20 years, emerging market nations have been collecting treasury bonds in their banking system, accumulating reserves. I think it's something like 55% of all currency reserves that are put aside into savings accounts now internationally are with emerging market nations. So they're going to be able to call the shots. They own significant reserves. They're sick of QE undermining their value. Americans don't think about how QE is undermining banking systems around the world, especially in Asia and emerging markets. So they're going to have their say. They're going to require it. It's far more than just oil, but oil is going to get the headlines when RMB payments are accepted.
I want to talk about the oil market more because the oil market's just been going pretty haywire there to the downside. We had a brief rally for a number of months earlier in the year, and then it went right back down, and it's broken support levels for the most part. Do you think the Saudis and OPEC hired Wall Street investment banks to short the paper futures market for oil and bankrupt U.S. shale oil companies in the near future?
No, I don't think so. I think what happened is a much, much bigger phenomenon is taking place that really doesn't get much attention and doesn't want attention by its masters, and that is the petrodollar as a structure is being dismantled. Large derivative contracts linking oil with the dollar are being liquidated. We're talking about multiple trillions in contracts that had served as part of the foundation for the banking system in the West. They're being dismantled, and in doing so, it brings about a rather significant additional marginal dollar demand into the equation, which pushes up the dollar. And since the petrodollar is not gone, it's being phased out. During the phase-out process, there's still plenty of dollar oil derivative contracts out there. So when the dollar rises, crude oil falls. That is the biggest number one factor behind the decline in crude oil price. It's not extra capacity from shale production. That's part of the equation. But the big factor is liquidated petrodollar derivative contracts. These have far-reaching consequences, and I don't think the Western analysts even want to discuss it, let alone try to estimate how much volume is involved. No, they'd rather talk about Iran and how much new marginal output will come in, and I'm hearing 500,000 barrels a day, eventually 1 million barrels a day. So that's your guarantee that the oil price is going to stay down.
The oil bears keep bringing up how much lower the oil price is going to go, but really no one can survive these low oil prices. The Saudis can survive for longer than other people because of their lower cost production. I think there's only a couple of countries in OPEC that actually have low costs around the Saudis level. The Saudis are borrowing capital cheap, but really no one else can survive these low prices for very long. Can a low oil price collapse everything, just like higher interest rates or a large government failure or bank failure, in your opinion?
Definitely so, and not for well-recognized reasons. You have lots and lots of energy producers in the United States. It's not just shale. Shale gets, and fracking, they get the attention because they're the marginal ones. They're the highest cost producers. But Exxon is in big trouble. They've cut their capital budgets. They've cut their R&D budgets. They're not building out in new projects anymore. So they're going to let things wind down. The big energy companies are at risk right now. They own quite a lot of subsidiaries and control quite a lot of this marginal production. So if it goes by the wayside, in other words, goes down shit river, you're going to see large, medium, and small energy companies take hits. Well, naturally, the smallest ones will die. The middle ones, some will die, some will limp along. But the big companies are going to carve off their broken subsidiaries. But there's another side to this. It's the hedging. This is not petrodollar foundation factor here. It is more like hedging against the oil price as part of a prudent business practice. We've had in the news in the last month or so numerous rather significant recognized names enter bankruptcy or default on bonds. And this is not going away. It's continuing. There have been some estimates based on exchange-traded funds and other formal funds, other formal measurable areas, that there's $1.3 trillion in losses to energy sector investments. We're talking about a huge trillion-dollar decline in valuations for stocks. You've got a string of bankruptcies. Fitch just made an announcement that 57% of all defaults now are with energy, drillers, and mining. Oh my gosh, this is not going away. The inclusion of Iran into the community of nations is going to guarantee the low oil price. So, back to the point of hedging. The hedging practice would allow a company, let's just say it's for argument's sake, it's Exxon. Exxon's got massive output. So a year ago, they put on hedges that guarantee them the ability to sell at $100 oil. So they're still selling effectively at $100. All right. If they didn't have the hedge there, they'd be selling at $50. Now, forget whether it's 45, 47, 43. I don't care. Let's just say it's $100 versus $50. All right, so Exxon is clearly not selling at $50 because they have the hedges on. Who's the loser? This is a zero-sum game. The loser is the big Wall Street banks. So I'm seeing this oil decline and losses in the energy sector. I'm looking beyond the drillers and explorers. I'm looking beyond them. Yeah, if they don't have hedges, they're going out of business. If they do, then who else might be going out of business? This is a Wall Street bank death blow. If the oil price stays low, you're going to have expiring hedges, Jason. This is a death blow to the Wall Street banks.
None of them have written off any bad oil loans yet. This could topple governments at a low enough oil price. I mean, it won't topple the Saudis yet because the Saudis have the lowest cost production, but I'm talking like Venezuela, and Brazil has been using Petrobras as a piggy bank for a long time to borrow cheaply and subsidize cheap oil in their country. I mean, they've been running at enormous losses. Petrobras has $270 billion in debt on their balance sheet and only $40 billion of equity last time I checked. That's a leveraged hedge fund right there. They're not low-cost producers. This could topple governments if the oil price either stays at these levels or goes lower.
The first step that I see is it's going to topple banking systems. I think Wall Street is at risk. You mentioned they haven't written off anything yet. Okay, there's a funny little phenomenon going on. There are a couple of high-profile companies. There's a big famous Oklahoma wildcatter who just dropped off his hedges, booked the profits, and is now running naked. He might go out of business, he might go bankrupt. We got very large companies here and large players who are going to die. And they're going to die because of the lower energy price. Entire banking systems are at risk. If you have, say, Morgan Stanley dying, it's going to take down the bank, it's going to take down part of Wall Street. If you have entire banking systems that collapse based in the West, based on these oil derivatives, oil hedges, it's both the derivatives and hedges, and they're not the same thing. They're not. An oil derivative from the petrodollar links the dollar with the crude oil price. A oil hedge enables a company like Exxon, oil producer, to effectively continue selling oil at $100. But there's a counterparty there. It's a zero-sum game. If you have a company that says, we're okay because we've hedged, the natural question should be, who's not okay, who underwrote and was guarantor for your hedge? It's largely Wall Street. They make the market. So I expect as banking systems collapse. You're going to have the risk of national governments collapse. And that begs the question of whether the U.S. government will collapse.
Jim, this sounds like subprime there with the housing, how, we had the banks, they didn't write off subprime for a while, and they said it was contained, and then it leaked into prime. People didn't have collateral. The assets were pledged multiple places and hypothecated. Is that what you're saying then, the shale oil derivatives and the oil derivatives and the hedges? Is this what we're looking at then, is a potential subprime where it could filter into so many other things with counterparties and collateral?
This is a redux of the housing market crash, but it's going to happen in the energy market, and it's much bigger because the big loser in the housing market crash involved also homeowners. U.S. government continues, even if 50 million homeowners in the United States lose their home equity. The U.S. economy does not continue if the major oil producers are all wrecked. You don't continue. This is not, oh, it's just a body blow, everything will be fine. No, it's not. The big banks were already deeply wounded from the mortgage collapse, the housing market collapse. That was a twin bubble of housing and mortgage. The housing side loss was borne by the homeowners. The financial side was borne by Wall Street banks and mortgage bondholders, which included a lot of pension funds. This energy collapse is going to kill major oil companies, going to kill a lot of minor companies, going to wreck all the marginal companies, and it's going to wreck most of the banks that own the derivative the hedges. I shouldn't call them derivatives. The oil market hedges. And now, you had for the longest time Wall Street boast that they make the market for the hedgers. Well, fine. And they probably are trying their best to lift up the oil price to get it back toward 80. And in comes Iran, joining the community of nations, and they're going to bring in their 1 million barrels a day. Why did the Saudis announce that they were going to continue with high output? Now, that brings up motive for your question, did they hire somebody? No, I don't think they hired anybody. I think that what the Saudis did was to say, we're going to keep our production high, and we're going to do whatever we can to wreck the nation's financial structure that stole all our gold in Switzerland. The U.S. and London bankers stole Saudi gold in Switzerland, and that's what the UBS and Credit Suisse prosecutions were all about. Not about tax evasion and secret slush accounts and Iran sanction violations. No. That's for the morons reading the press. No, I don't read the press. I thought, okay, that's a factor. I think it's pretty small. And later, okay, they stole the gold. All right, where was the gold located? UBS. We stole Arab gold. Now, what are they going to do? The Gulf Emirates, as a group, it's primarily UAE and Saudis. They have about, I think, 80% of the 2.2 trillion. That's a large sovereign wealth fund kitty. That's a huge kitty. And I believe that about 1.7, 1.8 trillion is sitting in treasury bonds. So are the Saudis going to say, all right, you stole our gold in Switzerland. We're not going to make a big deal about this. Maybe they hired some Wall Street bank. I don't know. I think it's kind of small. But we're going to keep pumping oil. We're going to keep this price down. We're going to wreck your bank because we know that you're underwriting the hedges for oil. We're going to make nice with China and accept RMB. And we're going to convert a lot of our treasury bonds back to gold. Okay, in the news is a lot of Chinese data about selling $100 billion a week for 2 weeks of treasury bonds. How come the Saudis are never in the news for selling their treasury bonds, converting to gold? That's kind of, I think a gentleman's agreement. Let's keep them out of the news.
The papers in the Middle East and Saudi Arabia, Jim, are actually quoting Saudi oil ministers and sources like that, people close to the Saudi family, and they're saying the Saudis are admitting that they're intentionally trying to manipulate the oil market lower with the not cutting the production to bankrupt shale oil guys. I've heard similar from other oil sources that I've interviewed who have 30 years or more of experience in the oil industry, who get to go to Dubai and London and sit at the high-end finance oil meetings that with OPEC ministers. And so it seems like OPEC sovereign wealth funds and the Saudi government, that they decided, they want to gain market share and they want the oil price to go long-term, but they want to penalize the shale oil producers and the other guys in the short term. And I guess they're willing to take some pain in the short term to get what they want in the long term.
Well, I agree that makes some sense. I don't disagree at all. They're also running out in Saudi land of their excess capacity. There's a lot of talk about Ghawar being drained, and I remember back in 2005, 2006, I got exposed to the Oil Drum, which is a very nice website for petroengineering, and a colleague of mine said, Jim, check this out. 94% water cut from the Ghawar oil fields in Saudi Arabia, which means of what they pump out of the ground, only 5 to 7% was oil. And now it's 97. So if the giant oil field of Saudi is 97% water, I tend to think that all the other oil fields that they use to produce oil, I have a feeling that they're maybe also somewhat drained, except for the newer ones that are, say, under 10 years old. But I must think that the Saudis have a motive that's unspoken. Let's keep the oil price down to kill the Wall Street banks. I think that's one of their motives. I think that they've got a lot of collusion going on with the Chinese. The Chinese are very smart people in finance. Very smart. They're not amateur hacks at all. And I think they might have gotten a big gentleman's agreement with the Saudis. Announce RMB payments for oil, keep the oil price down, keep your production up, because we think that'll destroy the U.S. banks, which is their government power center.
To add to your point there about the Saudis' Ghawar field in production decline, I think WikiLeaks confirmed that with U.S. telegraphs and from the leaked documents that that's happening. I think the Saudis' production costs are not as low anymore. They've had to bring on marginal fields. That brings me to the next topic. We're starting to see some evidence now that there may be emerging or developing silver shortages. What do you think a physical silver shortage means for the bullion banks who have been manipulating silver for so long?
Oh, this is an enormous area for a question. To begin with, the bullion banks have succeeded. They've got a mission accomplished. They've destroyed the entire precious metal market. They're halfway done to destroying the mining sector. Well, that's a real gold star on their foreheads, isn't it? What's their follow-up act? They've created unspeakable shortages for gold and silver. They've pretty much crippled the mechanism for supplying the markets. I mean, Jason, this is the effect. Next, I think we can expect Shanghai and China to exert muscle and take control of the gold market. We're seeing 50 to 70 tons now per week in offtake in Shanghai in their gold market. That's a lot of removal of physical metal, 50 to 70 tons a week. So, okay, that's even more pressure. And India, they've got a 60% increase in April and May, April and May, 61% increase in gold imports into India compared to a year ago. So, okay, the demand's all rising. The output from mining sector is in danger. The markets and COMEX haven't delivered any gold on future contracts since June of 2012. Hey, congratulations, they just destroyed the market. Now, the U.S. clowns who are running this show believe actually believe that if there's no more supply than interest, not paid interest, but mental interest and financial interest, like demand, like, oh, I don't care about gold anymore, there's no more to buy. I don't think people think that way. I think there are plenty of investors out there who are trying to buy gold. I just had an enormous surprise happen to me yesterday, talking to my father, and I mentioned some of my frustrations that my sister's sitting on $1 million 401k. My brother's got a bunch of cash set aside. My father's got an enormous amount of CDs in banks. And I said, look, Dad, my brother, my sister, and you're not investing in gold. And this is what I do. This is what I'm good at. I've got a large following. It's like 2,800 clients. In my own family, this doesn't, and it reminded me of an old saying from oh gosh, I can't remember who it was, but a prophet is never given respect in his own home. I'm not a prophet, but I'm doing rather well as a forecasting analyst of precious metal market and currencies and bonds and monetary policy. Gotten a lot of things right, but here's the surprise I got, Jason. My dad said, well, your sister has a financial advisor that she's been using now for 3 or 4 years, and she wanted some good protection on her large managed pension fund, her personal pension fund, and he's been getting her some gold investments. Now, I just assume, okay, it sounds like she's getting some bullion metal. I'll bet you 50-50, even odds, that my sister has bought some GLD.
Look at George Soros, his top money manager guy, this billionaire, this limousine liberal, Stanley Druckenmiller. He didn't do any of this research on the gold market, and he's worth billions of dollars, and he just bought a bunch of shares at GLD. He's going to learn the hard way.
Yeah, I think these guys are, I think they're just scared witless. They see the end of the dollar-based system. They see the end of the dollar as a global reserve currency. They see the end of the U.S. banking system, maybe from closer contact from derivative losses and the oil hedge losses. I think they're seeing an end to paper wealth in the United States. That, I think, is what's coming as a consequence. And if people can walk away, if they say, oh, gee, I've got a large mutual fund, I've got big bank account CDs, and that's all they've got is paper wealth, I think they're going to be lucky to walk away with 35 cents on the dollar.
What's funny about all this is I think the bullion banks see the writing on the wall in the gold and silver markets now that they've destroyed. I think they realize that gold and silver are eventually going to have their day and rise. My friend Lewis over at Small Gold, we talked about this in emails, SMAULGLD, for our listeners who want to check this out. He did a story on this. He actually confirmed off the record from other authorized purchasers from the U.S. Mint, official ones, that HSBC is official authorized purchaser for gold, and JP Morgan may also be an authorized purchaser for silver. It's just crazy, that these banks, they figured out ways to game the COMEX and the LBMA and so many other things, and they've kind of already figured out how to make money off the system and cheat the system and things like that.
Well, they've been stealing the GLD and SLV inventory for a long time. I've got a couple of clients who wrote me and said, Jim, I satisfy the requirements. I'm a GLD investor, and I've got a large holding, and I've asked for gold delivery on my shares. I satisfy the requirements, and they turned me down. They told me to get lost. And I asked, well, do you take it to a lawyer? Do you try to get some kind of power of an attorney and law firm behind that? And they didn't write back, so I don't know. Now this is very, very ugly stuff. The big banks have stolen the inventory of GLD and SLV for gold and silver. It's much bigger than this. I think now they're getting in line to get the supply inventory metal, raw metal, for the U.S. Mint and the Royal Canadian Mint. You're going to see, I think, complete shutdown in the Mint. They're going to say, no, we're indefinitely not delivering on any coins. And you're seeing that, you're seeing evidence of that by virtue of the fact that, like the 2005, 6, 7 of U.S. silver coins and gold coins, They're rising now in premium and starting to resemble collector items. They're showing premium like collector coins. They're not selling at spot. They're selling like collector coins. Okay, well, that's a very big development. Then you had another uglier event about 2 or 3 years ago. The founder of Scotia Mocatta, had a mysterious death. And some close to him said that he was murdered.
Wow.
Then there was pressure by the Bush family on the executives of Scotia Mocatta to make their inventory available to Wall Street. So in 2013, 14, and 15, they're draining Scotia Mocatta.
I think it's also a scam how the U.S. Mint charges an extra $2 premium on the coin to their authorized purchasers, that no matter what the silver market is, the demand is high or not. I mean, even if the price is low or the price is high, they get an extra $2 payoff bribe there. It's a racket.
You say that's a bribe. I don't know. Doesn't that maybe cover the capital equipment for the stamping presses and the equipment?
There's obviously inefficiencies there in the U.S. Mint. Normally, in the past, they've closed around November for the rest of the year, but now I think they're closing fairly early this year compared to other years. I think they're closing like 6 weeks earlier. It's just it's a government-run operation. It's just very inefficiently run.
Yeah, well, maybe the U.S. government is on budget for paying their stamping equipment for the coins, but if there's a small profit, maybe it's to cover that. I don't know. They're closing early, and I think they're lying on when they're going to reopen. And let's look to see if they reopen at all.
You also say that Shanghai is about to take control of the gold and silver markets very soon. You say they're already withdrawing 50 to 70 tons per week out of the West?
Well, I don't know if it's out of the West, but it's out of somewhere, and they're drawing it out of the market. So it's got to come from somewhere. I don't know where the supply into Shanghai is coming from. I'd be very curious to know where it's coming from, and I suspect it could be coming from Switzerland, like Basel, Bank for International Settlements. It could be coming from Rome, the Vatican. I don't know, but if they're bringing in that much gold, then it's removing it from a market in a shortage. So they not took control, but they're participating in the London gold fix. It's now going to be called the gold fix or the Shanghai gold fix, but there's some impatience by Western observers. Well, gee, when are you going to see some effect if China really did take control of the gold fix? Well, when are you going to see some effect on the gold price? All it does is go down. Maybe the Chinese want it to go down. Maybe they want to wreck the mining sector so they can buy it up.
That's an interesting theory. How would you respond to the evidence of the physical silver shortage now? We've had other gold and silver experts besides yourself come out and say that it's basically impossible for physical silver to be in a shortage, but it seems to me that, we have a price control, a covert one in place where the prices are capped by either the bullion banks or China or some combination of the two. Is a physical silver shortage possible, or is it impossible in your opinion?
Well, I think it's not only possible, it's been in effect for about 5 to 10 years. Anyone who thinks it's not possible in my book is an absolute fool. If you limit the rise in price amidst growing demand, all you do is produce a shortage. If you allow the price to go down from suppression in the paper contracts, the futures contracts, you're shutting down mines, which removes supply. So with rising demand and reducing supply, you're seeing falling price? I don't think so. Anyone who thinks that the shortage is not possible is, a fool at best and an absolute qualified moron at best.
It's economics 101, right? Like it's either Zimbabwe imposing price controls or Venezuela imposing price controls on beer or toilet paper or something. I mean, the goods are going to disappear unless they allow the market to correct supply and demand and allow the price to rise, right? That's the way things seem to me.
Yeah, and those are exactly where the shortages are in Venezuela. There's actually quite a funny shortage. I mean, it's tragic, but it's a funny economic observation. There's a shortage of rice and beans in Venezuela right now. It's because they're selling anything they can find to reduce the balance of payments deficit. They're selling it outside the country. They're selling everything. I wish they'd get rid of their government, but that's another story. Chavez lives. His name is Maduro. Maduro is Chavez's right-hand man. Nothing has changed in Venezuela except the chaos.
Hugo Chavez's daughter, I think, is the richest person in the country now. You know, that wasn't because she built a business and made her customers happy and grew GDP or anything. It's because they stole the wealth and transferred over there with guns. My next question for you has to do with U.S. Secretary of State John Kerry. He recently came out and said in public, if the Iran nuclear power deal had not gone through, it threatened U.S. dollar hegemony and the dollar status as the sole world reserve currency. Why do you think this information was released in public? Why would he actually say that on a recorded discussion?
I don't know. Maybe they just forgot to suppress that piece of news. My impression is that he's got the right conclusion, but he's got the wrong reason. I think it's true that the dollar is going to lose its reserve currency status, but attaching it to the Iran nuclear deal, that's just lunatic. No, the dollar is going to lose its reserve status globally for two reasons. QE, which is hypermonetary inflation, undermining global banking account systems and their reserves. And the second reason is war. We're using war on a credit card to defend the dollar. I mean, if you want to get really fine in the argument, the United States is now waging war on the credit card. Nations of the world are required to buy treasuries, which we use to wage war against them, trying to steal their gold, trying to undermine their governments, undermine their democratically elected governments, and the whole world is financing it with the treasury bond. The world would like to stop that. So, yeah, he's got the conclusion and risk right of the dollar going away as global reserve, but, I mean, he's got a stupid reason. I mean, why, if the nuclear deal with Iran goes out the window, off the table, why does that put the dollar at risk? I'm not clear on that. Or is it because the Gulf Emirate nations wouldn't like that? I mean, that's silly, just silly. No, it's QE and war. If we're going to have an African monetary policy and a Nazi war policy, then the world is going to have a counterattack, and that is to push the dollar out.
I think the U.S. has been exporting inflation and destabilizing a lot of other countries' economies for a while, too, in addition to that. And then the other countries, they make goods and services, and then we just print more dollars or digital dollars on a screen, and we just ship them dollars. We're not trading goods and services for goods and services here, so it's not fair trade. It's not free trade. All these countries are manipulating their currencies and so much other nonsense involved.
Well, it used to be that we would ship them legitimate debt securities, but that was before QE. A legitimate debt security that could go up in value or change in value. But now we've got controlled bond market. I mean, look at all the dumping that took place. $200 billion worth of treasury bonds dumped by China. And what's the effect on the bond yield? None. It's still 2.1. Big deal. It moved from 1.95 to 2.15. Big deal. There's no bond market. All that happened was that QE was increased in its volume to cover the dump bonds. I've got a new name now because we're about to see the point, Jason, where the Federal Reserve announces that they're going to amplify QE volume in order to cover the dump bonds by foreign nations, in particular China. I got a name for it. As of a year and a half ago, I was calling it QE to infinity. Now I'm going to call it QE to infinity squared.
Welcome to dystopia, Jim. I mean, Japan's doing it too. There's no demand for their Japanese government bonds. It seems like all these large governments and large economies, whether it's Europe or England or Japan or China, I mean, they're all trying to do financial repression to lower the interest rates and prop up their bond markets now.
Well, yeah, and next comes the currency war. And, you know, you got to ask the question, why is the United States so upset that China devalued their currency? Doesn't that lift the dollar? Well, for a whole generation, the U.S. has been all about maintaining a higher dollar, which keeps all the imports cheaper. Well, now it's a little different because China is devaluing, and China is a supplier to the United States. I mean, it's interrupting the import-export equilibrium. Okay, here's why I think the United States is real fuming angry at the devaluation by China. It has nothing to do with import and export. It has everything to do with triggering a currency devaluation war, a competitive currency devaluation war. It's called currency war or competitive devaluations, race to the bottom, whatever you want to call it. The United States doesn't want that because all the other nations of the world will push up the dollar even more. And the dollar's going to die of asphyxiation. The dollar's going to rise and rise, then vanish. I've been saying it for 2 years. Now it's happening. And I get moron hate mail saying the dollar's not crashing at all, it's going up. I never said it was going to crash, you idiot, who write anonymously, demonstrating an 80 like Bush IQ. I never said the dollar was going to crash. I said it's going to rise and rise, then vanish. Which is over their heads, Jason. These are morons, trolls writing hate mail. They're amusing morons. The U.S. doesn't want the dollar to rise, and rise more. They don't want it to rise anymore. We're losing control of the rise from the dismantled petrodollar derivatives and now the competing currency that China triggered. We don't want it. The dollar, if it rises much more, is going to die of asphyxiation. You take a hot air, you take a pack of balloons made of helium. You let it loose. When it gets up to about 6,000 or 8,000 feet, it pops. It pops because the air pressure is lacking outside and the balloon expands. That's going to happen to the dollar.
Rob Kirby says it's going supernova. The sun gets brighter before it's about to blow up. Supernova,
there are going to be a lot of analogies that come out there, but I like the balloon because a balloon that rises, most people understand. Well, I got to tell you this funny little story. I was watching a movie. It was a nothing movie, no big deal, but it had a setting of about 120, 150 years ago from London. And the villain was killing people by attaching 6 or 8 balloons with a shackle to somebody's leg and let them float up. And the person died from asphyxiation. But the balloon didn't go off into outer space and attain orbital speed. The balloon popped because the external air pressure was lacking and the internal balloon pressure kept, it stayed the same, but the outer edges of the balloon exploded because it kept expanding. And the body was found in a field. Why was the body found in a field at all? Because the balloons popped. The dollar's like a pack of balloons floating up, 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 and the U.S. government doesn't want the competing currency wars because it lifts the dollar uncontrollably. And what, we got a big shoe to drop here, and it doesn't get much attention, but it does get some. It's the emerging market debt. It's denominated in dollars. They took advantage of the 0% that started in 2009 and 8, or 9 really. They took advantage of it, and they built up, and they've got something like $3 or $5 trillion in debt. It's dollar denominated. Their currencies are going down, so their effective debt burden in home currency perspective is rising out of control. They can't do the debt service, so you're going to see a string of emerging market dollar debt defaults occur. That can't be good for the dollar. No, the whole world is going to have a long, long list of reasons to get off the dollar standard in trade. And I emphasize in trade, not currency, because they control output from their export industries. And they're going to demand RMB. And after that happens, lots and lots of nations of the world are going to get rid of their treasuries in their banking system. And the U.S. is going to be forced to come up with a Scheisse dollar for domestic use only, suffer a string of devaluations just like Venezuela, suffer domestic mayhem and chaos just like Venezuela, and you're going to see a lot of damage done to the U.S. and maybe bring down the government. I mean, these are very big concepts here.
I have a question about the Federal Reserve. The Federal Reserve seems intent on testing the waters with a small token interest rate in the near future increase, yet its balance sheet keeps growing to over $4.4 trillion that we know about, despite the Fed saying it ended QE, and the U.S. will actually need lower interest rates to keep the game going just a bit longer, and that ties in with how they don't want a stronger dollar, they want a weaker dollar to deal with their debt problem and lower interest rates. Why haven't most people on Wall Street and market participants figured out that with a phony $18.4 trillion in debt, according to the U.S. debt clock, the Fed is trapped and can never meaningfully raise interest rates again until after the system has already collapsed?
Well, if they admit the Fed has lost its power, they would hasten the removal of the dollar as a global reserve currency because its custodian is the Fed. The Fed has no power. I think the Fed has no power. They've been trapped for a long time. I remember writing, Jason, in my own newsletter back in 2011, 2010, the Fed has no options. They're going to have to go to QE next. And when they do, I wrote this back a year before QE took place, was installed. I said once they put QE on, they can never take it off. Once they put 0% interest rate policy on, they can never take it off. So the Fed, you can't say the Fed is powerless without putting the dollar at risk. Wall Street, I think, has they've got a bad habit of pounding their chests and saying, yeah, beat the drums, keep the dollar strong. But now they've succeeded too much and they've lost control with the petrodollar dismantled derivatives. They've lost control. And it's going to have a second effect with the continuing lower oil prices wrecking the hedges that the Wall Street banks have underwritten. So the Wall Street banks are kind of like fools who are beating on the drums that end up strangling their necks. It's kind of funny what's coming. I'm always amused by Wall Street's self-destruction. Something might be happening, though, that's a little bit more perverse. It could be that the U.S. government is planning a scuttle event, using the Fed to raise interest rates, wreck the system, bail in on private accounts, namely stealing a third of the accounts, stock accounts, bond accounts, savings accounts in banks, CDs, and with this scuttle event, install martial law and try to get the fascist state as a concept to spread across the West, including Europe, where the United States has done a great job in destroying their economy with the Russian sanctions. So it could be that the Fed is going to be an instrument for scuttling the system in the United States, wrecking the nation's integrity, and joining up with Europe that also has wrecked integrity and wrecked system, and installing the fascist state. They call it the New World Order. I don't like discussing that much. I prefer calling it installing the fascist state. And I don't think it's going to succeed because the Chinese are on the scene. The Chinese have bought 1/3 of all U.S. major city commercial properties. I'm talking office buildings, office parks. That's a large purchase. They've been doing this now for 5 years. And you know, it hardly put a dent in their multi-trillion-dollar reserves because, I mean, you buy up 1/3 of the office buildings in Dallas, Texas. What have you invested? A couple of billion? $4 billion? Okay, multiply it by 15 cities. What is that, 70 billion? 100 billion? Even if it's 200 billion, it doesn't put a dent in the $3.5 trillion reserves that they possess.
That's like 1 or 2 months of trade surplus money, right?
Yeah, they had $25 billion, $23 billion a month. I mean, I had a good friend of mine, a smart fellow, who said to me a year and a half ago, Jim, I don't think the Chinese have much of anything left in their trillion-plus U.S. Treasury bond, holdings. And I said, wait a minute, what do you think? They've spent it, invested it? He said, yeah, if it's not, properties all across Africa or Australia, port facilities. There's a deal a month out of China. I said, yeah, but wait a minute, a deal a month out of China, but what are we talking about? $1 billion here and $1 billion there? They've got 23, 25 billion a month in new input from trade surpluses. So no. If they spend, I said to them, if they spend 20% of what they're locking away in reserves on African and port facilities in the West and mining facilities in Australia, if they do 20% of the new income, they're doing well. And I don't think they're even doing that. And he said, well, you make a good point. Yeah, okay. You make a good point. What, I did some arithmetic?
A lot of the people out there on Wall Street are pretty lazy. My next question for you has to do with someone who claims to be an anti-establishment candidate. That's Donald Trump. What do you think of Donald Trump if he were to win the presidency? It kind of scares me to think that he would have control of the nukes. What about you, and do you think he would probably want to start another war?
I don't even entertain the notion that he'll become president. He must be serving a purpose by allowing his candidacy to continue. So what is that? He's a Republican candidate, right?
He claims he's running on the Republican ticket. There's a lot of people out there saying, he's a fascist or he's more of a Democrat. He was a registered Democrat, I think, up until 2008 or 2009, and he's been good friends with the Clinton family for a very long time.
Yeah, well, he was running in 2012, and it seemed like his main campaign thrust was Obama's background. And they threatened to kill him, so he withdrew his candidacy. Okay, so I'm not really sure. Is he running as a Republican?
Yeah, he's on the Republican ticket, but he's, using populist rhetoric there. He's just repeating that he's angry at both parties and, other things like that. He's angry at immigrants and so many other things, but he seems to me to be like the guy who claims to be anti-establishment, but he's very establishment. He admits to buying lobbyists and working within the system, and he's friends with all these Wall Street guys, and he was on Fox Business or Fox News almost every day for 20 or 30 minutes, or CNBC.
Yeah, but okay, what are his main campaign planks right now? Is it not immigration?
That, and he's very anti-China, so he doesn't want to do trade with China. He blames, all the currency wars on China and the foreign policy on China, so I think he wants, goods made in the U.S. and things like that. It seems to be very protectionist, and he doesn't believe in any type of foreign trade and things like that. That's what he seems to be. He's repeating a lot of
Well, if he's anti-China, do you think he has the balls to examine the Wall Street gold lease from China in 1999 that won the most favored nation status? Does he have the balls to challenge that?
I don't think he knows anything about that.
Okay, here's my take, and this is really kind of off the cuff. And if I get quoted, fine, I don't really care. But it's really off the cuff. If he's running as a Republican, then he's like the poster child to create a furor over immigration. And if we do have civil conflict inside the United States, and that contributes to martial law being installed, then I believe immigration will be a big piece of that. And they can thank Trump for fanning those flames. Okay? So maybe he's going to be set up for a future fall guy. Maybe he'll drop out of the race, and all he's really done in the meantime is to take up press space on the Republican side, making the way for a new white horse to come running down named Jeb Bush. So Jeb Bush doesn't want the attention or scrutiny month after month this early in the race. Maybe he kind of likes having Trump around because he's a lightning rod for the immigration issue. He's a lightning rod for the China issue without bringing attention to the bankers that prompted it in the first place and planted that seed. So maybe a white horse is preparing to come later after Trump decides, I don't really want this presidency. I think the nation's going to shit anyway. So I don't really know. And Honestly, I don't care. I don't give a rat's ass, Jason, about who the next president is, because if they can't control that president, they're going to kill that candidate. Look what they did to Ross Perot. Clinton threatened to murder his children. Okay, so Ross Perot lost his enthusiasm during the race, and Clinton won. I don't think Clinton really needed to distract or push aside Ross Perot. Look what happened with Obama being challenged by Trump in the early months, challenged his identity. Okay, he was pushed aside with a death threat. Hey, death threats and murder, I mean, look what happened to John Hines. He was involved in some serious Senate investigation. John Tower of Texas, he was involved in some serious investigation. These people died. They were removed. I'm not saying they're going to kill Trump. I'm just saying that if he becomes a real problem for the system, that he might go. And whether he goes quietly or goes feet first, as my mother would say, I don't know, and I don't care. I haven't cared about U.S. presidential politics since 2000, when I realized these are just two different sides of the same narco presidency line. I don't care if they wear a red coat or a blue coat, they're still narco presidents. I didn't see any difference between Clinton and Papa Bush. I don't see any difference in Obama. People don't look at the people who are running, the men and women who are running the State Department and the foreign offices for the State Department and the U.S. government. It's the same neocons that Baby Bush put in place. I don't care if Obama wears a blue coat and talks about Obamacare and wins the the poor vote. I don't care if he wins the poor vote from his liberal tendencies. I don't care. He's still the narco president with the neocons running the fascist wars. Very few people look closely at what these wars are all about. It's not just to defend the dollar. It's to interfere in competition with heroin. It's to capture the Afghanistan heroin. We captured 80% of the global heroin production. And under our guise, under our leadership since 2003, the production of heroin in Afghanistan has risen 14-fold or 12-fold. And the idiots who control the budgets are told, well, you know, it's those pesky Taliban in Afghanistan. We need even bigger budgets for Afghanistan to wage war so we can be more successful in this heroin trade battle. My gosh, what stupidity! Afghanistan was to capture the prize of heroin. Why did we get into the Balkan Wars after Yugoslavia fell? Why did we wait so long? It's because because Clinton and his advisors finally realized we can capture the East European heroin trade. Oh my gosh, where does the Afghan heroin go first? It goes to Kosovo, and then it goes to Turkey. My God, these wars are about heroin and gold. My gosh, and defending the dollar. My first inkling on this phenomenon of defending the dollar with war, it came when I was just starting up the newsletter. It was early 2004 when I started the newsletter. In a few months, the South Koreans announced they wanted to diversify away from treasury bonds. The next week, we announced military naval exercises off the Korean coast. And the Koreans were saying, what for? We didn't answer them. This is basic. If you don't look at the unusual angles, you don't see what's important and what can be verified. And that's one reason the Hat-Trick Letter has done so well, Jason. I don't look at the conventional garbage factors. I don't say the dollar's rising because the U.S. economy is showing strength in its recovery. That's the crap propaganda put out there. We're stuck in a depression in the U.S. economy. Now, I don't worry about Trump. I'm amused by it. It's amazing. Let's see where it goes.
Yeah, he's pissing everyone off. He's insulting people left and right. It's pretty crazy out there. They can't get enough of him. He's a circus right now for the media. My last two questions, though, are about the gold market. Why do you think mainstream progressive billionaires like George Soros' top money manager, Stanley Druckenmiller, are starting to look at buying gold when they have never owned gold in their lives?
They're scared to death that the dollar's going to go away. They're scared to death that the dollar's going to lose its global currency reserve status. They're scared to death that the entire paper wealth system that they manage is going to just blow away into confetti. They're scared to death that their power base is going to go away. I wish them the worst. I wish them a speedy decline, forced retirement, tin cupping on the corner. These guys are scared shitless, Jason. They're scared. The elite are scared. They're running on the defensive. This is so funny. I just learned how to say scared shitless in Spanish. Aterrado hasta la mierda. Literally, it means I'm terrified up to the shit. These people are scared shitless. And so are Wall Street VPs, executives. They see what's coming. They've delayed the death of the system for a long time, and I give them credit. When I started the newsletter in 2004, I thought by the turn of the decade, 2010, we would be looking at the replacement of the dollar and a return of the gold standard. I did not anticipate war. I did not anticipate tremendous gold thefts out there. I did not anticipate that the New York Fed would steal gold from our own allies. I didn't anticipate that Tianjin would be blown up, which is the most strategic business center in all of China. I didn't anticipate that QE would come on. I mean, I thought, well, we might even go to 0%. But gosh, I can't imagine we'd go to QE. Didn't that destroy the Japanese system? Isn't anybody studying the Japanese system? They never got out of QE. I concluded, I wrote an article before the newsletter. I wrote an article in 2003 that compared the United States to Japan, and we did not look favorable relative to Japan. I said, we're going to go down the same path and approach 0% with a failed and insolvent system, but without the Japanese industry. They have a bigger industrial base than we do. This is game over. And when you see Druckenmiller and others look for gold, and when you see even my sister looking for some gold, even if it's GLD, I'm going to laugh so hard if she said, Jim, I don't understand. I had gold, but I was forced out of it and had to sell it for a loss. I'm going to say, why didn't you consult me, you effing idiot?
George Soros is buying gold stocks too, so I mean he's insiders. He's obviously been buying gold, physical gold, probably for a while, and he doesn't have to declare that in his fund holdings, but he's been buying the gold stocks too lately, so I guess he's betting on a gold rise soon too.
Wait, gold mining stocks, you say?
Yeah, he's been buying gold mining stocks recently. That's what his filings say. Yeah.
Well, that's very, very interesting. Is he buying more than Barrick, or is he buying a diversified account of mining stock? Do you know?
Not offhand. I think it's a couple gold mining stocks so far, but he may be having more than just a couple. So we'll find out in the next few months if he's been buying more than just a couple.
Yeah, I'm watching Barrick Gold kind of, not closely, but whenever I hear anything, I don't let it pass me by. I absorb what's going on with Barrick. They've got some deep problems. They're getting downgraded on their debt, even though they're selling assets. So they're going to see reduced output, and their debt is not going to come down a huge amount. They're still going to have a big debt load, and they lost out on Pasco Lama in Argentina-Chile border. So I think something very big is going on, is my point regarding Barrick. The Chinese are buying into some of their projects as joint partnerships.
in Africa. And Barrick just sold big gold stream to Royal Gold. Royal Gold took them to the cleaners on like one of their lowest cost gold producing mines. Ooh. And they claimed it was a non-core asset and all this PR fluff propaganda stuff that they put out. Oh, you know, it wasn't a big deal that we sold this. It seems to me, you know, the banks ordered them to sell this because they had too much debt and maybe in breach of their debt covenants or other problems, like you mentioned, maybe with their gold hedges and things like that. They're selling assets they don't want to just to survive.
In other words, the bank forced them to sell one of their better properties because it would fetch a big price. Here's another angle regarding Barrick that very few people are looking at. I raised it in my August newsletter, maybe the July newsletter for the clients. Barrick is the author. They launched the evergreen gold contracts in the 1990 decade. Those are very special gold contracts that allow for sale and the reflection in the gold price based on the dumping sale, but without any obligation to deliver on physical metal from those contracts. In other words, they were an officially sanctioned and legalized gold suppression fraudulent contract. Okay, I believe the Chinese are coming into Barrick's room for two reasons. They want some of their technology, but they might also want to get in there and remove the logjam of the evergreen contracts. Maybe the evergreen contracts are the only thing now preventing a 1,000-point rise in the gold price. Got to clean them up.
You know the story of one of the co-founders of Barrick Gold, you know, many decades ago, right? You know he was former CIA?
No, but their list of executive board includes Moroney and Papa Bush and a lot of really scummy characters.
I know about that, but it started even before then. One of the founders, I forget the guy's name, with Peter Monk, who was the other co-founder, the guy was former CIA. Yeah.
All right, well, it's interesting that the chief executives, I shouldn't say chief, some of the main VPs in Barrick way back, they were bankers. They weren't engineers.
Isn't Barrick's current CEO, he's former Goldman Sachs now. They put him in there, so it's kind of, you know, wondering what's going on there.
Yeah, and when China comes in partnering with them, I wonder even more. So what is China doing? And that's why I suspect they might be looking for technology and to clean up the evergreen logjam. They might have made a conclusion after a close look at the gold industry and the gold market, might have made a conclusion that the only thing interfering with the rise in the gold price is the Barrick evergreen contract that are still out there.
Speaking of China and gold, my last question for you for this interview is, why do you think China intentionally underreported its physical gold holdings when they announced only 1,600 tons increase from 1,000 tons, so only about a 600-ton increase at the PBOC?
Why does a cat play with a mouse? Have you ever seen a cat play with a mouse? It's brutal. It's brutal. I had a cat. I lived in West Boston. This was the late 90s. And I had a wonderful little cat, Tiffany. I let her out, and she'd bring back mice. It was amazing to watch. And, you know, I didn't say, all right, let's take the mouse and throw it in the garbage can. Let's you know, kill it quickly, whatever way. No, let's let little Tiffany do whatever she does. It's amazing. They whack it on the side of the head, they force it to move, and they pounce on it. And they give it a little bite in the back, and they let it go, and they whack it in the head again. It tries to run off, and the cat pounces on it again, and they repeat this 20 times. It went on for 2 hours with little Tiffany and the mouse. It was hilarious to watch, me and my roommate. But what's China doing? Since when do you do anything but lie to liars? Why do the honest broker gold advocates and followers believe China is going to tell the truth to the U.S. government and the World Gold Council that pretty much operates out of the U.S. government? Why would China tell the truth about what they have for gold? What's in it for China to tell the truth to a bunch of liars? They're not just liars, they're criminals. They're not just criminals, they're murderers. They're not just murderers, they're war criminals. Why would China tell the truth to liar, fraud king, murderer, war criminals?
Not unless they're ready to immediately collapse the system like in the next couple of days. Then they can give them the middle finger and say, we have 20,000 tons of gold or something. But, if they're not willing to do that immediately, then it doesn't make a lot of sense. I agree with you.
Well, I think they're just going to do what a cat does. In another year, if this system is still in place, they're going to say they have 2,500 tons or 2,200 tons. They also don't reveal what's in their two major sovereign wealth funds. They've got two funds, and see if I can locate. I got little slips of paper on the wall here. One is the SAFE fund, and the SAFE is the State Administration for Foreign Exchange. Okay, that's one fund, but they got another. It's called the CIC, the Chinese Investment Corp. That's much smaller than the SAFE. So SAFE and CIC are two Chinese funds. Basic question, Jason. You think they own any gold?
I'm sure they do.
Okay, but they're not required to because they're not central bank entities.
So they don't have to report it in public. But that's the easier way for them to get rid of the dollars, because then China government is buying gold on the Shanghai Gold Exchange. They have to buy in RMB, and then they can't dump the dollars there, right? So it makes sense for them to buy the gold with other entities and dollars outside of China.
Well, they can dump dollars to get RMB and use the RMB to buy gold. That's pretty easy. But my point is that the Chinese own a lot more gold than what they have in their central bank. So maybe they're telling the truth that the People's Bank of China has 1,600 tons. Maybe they're not telling you that 15,000 tons are in the SAFE and CIC, and another 8,000 tons are sitting in wealthy Chinese family bullion bank account vaults. So maybe they do have it, but a lot of it is in private families, and a lot of it is in sovereign wealth funds. And the more I think about it, the more I conclude that the bigger unreported amount is the private families. I think the SAFE fund has quite a bunch of gold. And let's bring it back into American terms. Do you think if the Clinton, Bush, and Rockefeller families own a lot of gold, that they're going to tell you about it?
Probably not.
Okay. Do you think the wealthy Chinese families are going to tell us what they own? No. So why do they not tell us what they really have? Because they don't lie to liars. And if their private families own the largest portion of the nation's reserves, then maybe they're going to keep that a secret until they announce the gold-backed RMB.
My friend Lewis over at Small Gold, his theory, and he put out an article about this, he thinks that, similar to the way you think, he thinks that the sovereign wealth funds own a lot of gold, and also the non-central banks. So the larger Chinese banks, the ones that are state-owned, that they own a lot of the gold, and China just moved it there so they don't have to report it officially out in public.
Well, yeah, it's a shell game, but it's also a cat and mouse game. They don't want to tell the truth to a pack of liars and war criminals. But, it's kind of like what happened with the Iran sanctions. The Obama administration, being the rank amateurs that they are, wrote up the Iran sanctions, and they said that their central bank cannot process international payments for oil. So what happens is the central bank enlisted the help of the 3 or 4 major Iranian banks. I mean, come on. This is just the same old stuff. When amateurs write a law or a policy, it has easy workarounds. But I think China's laughing all the way, past reading the newspaper. This is turning into a comedy tragedy. The U.S. just doesn't have anything left anymore. I mean, I got told back 4 years ago, the voice said, Jim, I need to tell you something. I'm in contact with a lot of executives across Europe. They don't even return American phone calls anymore. So the isolation started a long time ago. And it's just going to get worse. Unless the United States produces gold, and I think a lot of it was stolen from Wall Street by the Clinton, Bush, and Rubin gang, unless we produce this gold to have a gold-backed currency, we're going to the third world. It's that easy. And I don't think the Clinton, Bush, and Rubin gang, Rubin representing Wall Street kingpins, I don't think they're going to give up this gold because they know that it's going to go up in value. They know it's going to do a tenfold rise. They know they're going to be multi-billionaires. So why would they want to give up the gold that they stole fair and square? I love that phrase. We stole it fair and square. Yeah, you're right. They stole it fair and square. American people never put the feet to the fire for the government to do an audit of Fort Knox. They accepted the story that it went to West Point. By the way, West Point is a location for some of the gold only because that's where a mint operation is at work. They make coins there. Why do they make coins at West Point? Because that's where they move some of the stolen gold.
To pay the military in case of collapse, just like what the Roman Empire did to keep the military in line?
Well, that could be, too. I mean, they probably store a lot of liquor to make sure the military performs well, too.
The middle class is just being destroyed either intentionally or unintentionally by both parties for the most part. Most people who are involved in the system, the insiders, the crony capitalists, and the Marxists and things like that, the fascists, I mean, they're just raping and pillaging the system pretty much like at the end of almost every other single empire that's ever collapsed in history.
I call it the fascist business model, Jason. I latched on to that term when I heard about it just 2 or 3 years after 9/11, and very few people seem to understand that the Patriot Act has 90% correlation with the Nazi manifesto from Nazi Germany. It's got the same architects. It's not the same people. It's their children and their grandchildren. The U.S. has become a fascist state. It's got no longer constitution. I mean, when I hear a Supreme Court made a ruling and they cited certain clauses from the Constitution, I giggle. Why is the Constitution even cited after the Patriot Act? Didn't that rip it to shreds? Oh, no. It just ripped to shreds the Bill of Rights. So, you know, we're seeing...
Welcome to dystopia.
Yeah, well, this is the 9th inning. The Voice wrote to a group of us in our little ring. We've got a ring of 6 or 8 guys. And he wrote to us in June and said, we're in the 9th inning. This is it. You're going to see an acceleration of real big, ugly, nasty events. Okay. I think Tianjin qualifies, don't you? I think the RMB devaluation qualifies, don't you? We're going to see a lot more. They're going to be coming in rapid fire. And I remember saying way back in the beginning of this year, I don't know when the dollar is going to die. I don't know when I'm not saying it's going to crash, people. I'm saying it's going to vanish. And that's going to be its death incident. It's going to be replaced by a domestic dollar that I call the Scheisse dollar. I don't care what they call it. I call it a Scheisse dollar. Scheisse is German for shit. They're going to have a devalued currency right out of the gate. We're not going to survive a new domestic currency because its fundamentals look worse than Greece. We're going to have a string of devaluations after scrutiny is given and the independent audits determine that the Wall Street and New York leaders of the U.S. government lied again. That the new Scheisse dollar does not have a gold backing. They will say it does. It's going to be the same BS of deep storage gold, but the BRICS are going to require international audits. And that's where it's going to be lights out and more devaluations. Notice what happened with the Venezuelan bolivar currency right after right after Chavez was killed or died or whatever, or before, during, or after, but it was right around that event. It did a 40-something% devaluation, and then in less than 6 or 8 months, it did another 30% devaluation. Okay, 75% was the devaluation in under 1 year. Wow. That means you got triple the prices of all imports. That's what's coming to the United States. An unbelievable nightmare for import prices. That's what I think we can look forward to, Jason.
Oh man, sounds like a lot of inflation is coming with this currency crisis up ahead. Well, Jim, I just want to thank you again for your time. We'll definitely have you on in the next couple months for updates on the situation. But with the stock markets in meltdown and in a downtrend, it's looking like all hell may be about to break loose in the near future here.
Oh, I agree absolutely with you. I'm 100% with you on this. We're breaking down, and we're breaking down with acceleration. And we're breaking down also with lost allies. The U.S. is going to be pretty much stuck going it alone before long. I watch Germany closely, and there's a lot of internal rumblings right now in Germany. They're pretty much saying, wait a minute, we need to reinstate our connection with Russia. This is not good. There are 3,000 or 5,000 German companies doing business in Russia. You can't cut that out and expect to avoid a recession. Germany almost never gets recessions. When the rest of the world has a recession, Germany ekes out a portion of 1% growth. Now, look to Germany. If we lose Germany, the U.S. is going to go into very accelerated mode in the breakdown. All right, well, it's a pleasure being on. I hope people go to www.goldenjackass.com and look around and sign up for the newsletter, Jason. I think people will be very pleasantly surprised at the depth of the work in there. I just had a marathon 2 weeks. I posted 2 reports. One was this Monday and another one was last Wednesday. They're very exciting events.